Hello and welcome to day one of GatherVerse Money Summit, and thank you to Pico for sponsoring us. And I absolutely love that video. But I'm here today with some amazing panelists, and we're going to run around to everyone and do a quick introduction. But before that, this roundtable discussion is about digital currency and the human trust. So very excited to be talking about this. So what we're going to do is start with my left-hand side or right-hand side, whichever, if you can see my thumb. We'll start with Nadja, then we'll go to Mohammed, Rodrigo, Sean, and then Jordan. So Nadja, great to see you again, and over to you, please.
Hey Russell, lovely to be here, everybody. My name is Nadja Bester. I'm the co-founder of Adlunum. It's a Web3 and now also an AI company, because that's of course what one does in 2026 or almost 2026. So I've been in the crypto space since 2017 and very focused on how to build more equitable systems that empower the everyday person as opposed to institutions. Happy to be here.
Thank you for joining us, Nadja. Mohammed, over to you. Please introduce yourself.
Hi, everyone. My name is Mohammed. I'm currently 21. I'm the executive director of the Gen Z movement. I'm an author as well. I'm a professional speaker on AI and understanding AI as we bringing AI into the Gen Z movement. And happy to be here. Nice to meet all of you.
Thank you for joining us, Mohammed. Rodrigo, great to see you for the first time. Please introduce yourself and welcome to GatherVerse.
Thank you, Russell. Hi, my name is Rodrigo Movino. I'm 29 years old, and I'm the co-founder of Serang Wealth Management, and we're an investment manager in which we invest mainly in crypto, and we have been in crypto since 2018.
Thank you for joining us, Rodrigo. Sean, you know the drill.
Good to see you, Russell. Happy holidays. Well, I'm Sean Mann. I'm the CEO and co-founder of a company called RP1. We've actually created the world's first 3D browser. And so if you think the inflection point of when the first web browser opened up the World Wide Web, we've literally created the first start of an open ecosystem for the spatial internet. And really, it's going to help deliver XR experiences, AI, and obviously some Web3 components to the world with no friction. So super excited about it.
Thank you for joining us, Sean. And last but not least, the legend himself, Jordan. Welcome once again. And please introduce yourself. Oh, Jordan, I think you are either muted or your microphone's unplugged. I'm not sure which one it is. Might be one or the other. But in the meantime, whilst you sort that, I'll quickly... Oh, there we go.
Yes.
There we go. You're
that.
Awesome.
For some reason,
please introduce yourself.
Yeah, defaulting to some AI noise canceling microphone I don't have. So great to see you again, Russell. Happy to be here again on the GatherVerse. So my name's Jordan Woods, and I'm a founding partner at StarChain Ventures. StarChain Ventures is a Silicon Valley-based VC, and we're very much focused on both AI as well as blockchain, Web3, transforming all of the major industries like finance and healthcare and supply chain. We wrote a book called Enterprise Blockchain Has Arrived, which actually predicts a lot of the things that are happening right now, and happy to get into that more on the roundtable.
Appreciate you being with us, Jordan, and great to see you once again. And also, I'll quickly introduce myself. My name is Russell. I am the GatherVerse, Director of Global Affairs at GatherVerse, and also I am the co-founder at JustVerify as well. And JustVerify is focused on building the trust infrastructure for AI, and obviously one of the core components being that is obviously digital currency within AI. So happy to be with you all here, and let's get straight into the questions. So question one is, how would trust be defined when it comes to digital currencies? So what we'll do is we'll go around the same way that we just did a minute ago. So Nadja, we'll head over to you, and then Mohammed. So please, Nadja, kick us off. What would trust be defined when it comes to digital currencies for you and your lens, Nadja?
Yeah, I mean, I think, just quickly to get us all on the same page, trust is not an absolute thing. It is highly subjective. And ultimately, it's about strategically suspending disbelief for as long as it takes to, get through with the transaction. So I think ultimately, if we look at history and we look at how far we've come, we've moved from the kings and the kingmakers to today, we trust the code. And now going forward, we are talking about an agentic web where trust takes on a completely different meaning, because now we'll have AI agents interacting and making transactions on our behalf. What trust means to them? What trust means to a human is something completely different than the code itself. So I think it's very interesting, if you look at sort of how blockchain has evolved, and now, of course, with AI as well, we are increasingly replacing human authority with these technological systems. And I think it's really, really interesting if you look at sort of the relationship that humans have had with trust up until now. We've always had to trust, whether it's authorities or whether it's the systems that we participate in. And really, for the first time ever, we are being asked to look at what trust is. And so I think, ultimately the difference between the definition of trust in the past was kind of the trust me, bro, vibe, as opposed to today, where we say, okay, well, I don't actually need to trust you. I can trust in the code because I trust in the math and I trust in the algorithm. So yeah, excited to get more into this as we go along.
Very interesting perspective, Nadja. And I would agree in some aspects, maybe disagree in some other aspects. Like, for example, I think the definition is still definitely the same when it comes to AI. So, for example, it's the belief in the trust for someone or something. So if you basically trust your AI to do its capabilities when it comes to the performance, the behavior of the model, then, that's kind of one side of it. But I also do agree on the other aspect that, is the definition, or is the trust being adjusted, so to speak, when it comes to AI. So I definitely see your perspective there. Mohammed, what is your thoughts on how would trust be defined when it comes to digital currencies from your lens? Is it over time? Is it like, just give us like a bit of your perspective on that, Mohammed.
I think, am I audible now? Sorry.
Yes.
Yeah. All right. Perfect. I think it's, from my perspective, it's having the confidence that the system will basically protect value, and ensure fairness as well, right? And I think operate transparently without exploiting its users. And once that is achieved, I think it's the briefed system that will actually serve people and not the other way around. So over time, I think once these have been implemented, then I think trust will be more, what would the word be? Efficient, I think.
Yeah, that's one word. But yeah, and transparency is one of the core parts of trust for sure. And I think trust is a very multitude equation. It's not just the one thing that actually really defines trust. There's multiple parts to this. That's why I believe there's going to be trust architects and trust people out there who are going to literally be specifically focusing on trust, maybe even trust engineers. But Rodrigo, from your lens and from your point of view, from the wealth management side, I mean, it's a very interesting industry for sure. How would trust be defined when it comes to digital currencies from your point of view, Rodrigo?
Well, from my point of view, and regarding the investment management world, it's I think, of course, in the technology, right, that the system will work fairly, but also if what I think is that we have to even go back, because it's to the foundations of any monetary system, right? So why do people trust in any type of monetary system, either fiat or digital currencies in this case, right? So it's what's behind the currency, right? So right now in fiat, well, you have governments. Basically, you have governments and central banks. Whilst in digital currency, there's a slight change. You have technology. You have enterprises including, right? You have people. It's not the same. So it's a sort of a change of a dynamic of what to trust, who to trust, right? And we're living right now in a world, in a time where, well, people are they're not trusting governments anymore, and digital currencies during this change where the economic model is changing, and it has to change. Digital currency will be the next step for the monetary system, right? So trust has to be more of trust in humans again, more than institutions, but more in humans and what we create, meaning the technology behind the digital currency.
No, that's very interesting, Rodrigo. And, you know, when you think about stable coins, when you think about crypto, and also when you think about tokens, you know, it's a very, you know, you never know who are behind these projects. You never know what they're going to do. How many scams has there been now in Web3 over the years? I mean, Nadja, I'm sure you know that very well, as much as I do. So, you know, it is a very, you know, complicated world, I guess, we're going into. And it's like, okay, who do we trust? Who do we not trust? And, you know, that's something we really work on at Just Verify, is we work on the verification aspects, and we believe verifying before trusting, so to speak, right? Being able to, you know, verify, okay, has the cryptocurrency gone from one wallet to another? Can we verify who the person is behind the scenes and making sure that they're legit, etc.? So, Sean, let's bring the conversation over to you. I want to ask you a bit of a different question. In what ways does the trustworthiness of a digital currency differ between decentralized and centralized system? And this is a very interesting conversation, especially when it comes to the blockchain aspect. So what are your thoughts on this, Sean?
Well, it's kind of tough. I mean, I think Web3 and blockchain present some amazing monetary ways of transacting all over the world with some more freedom than we have today. But I think there's a lot of challenges. I think a lot of the cryptocurrencies are scams. They're typically around projects. They're there to make money really fast, but they're not built to really for long-term value or long-term transactions, if you will. But the ones that have actually done that, which are more like stable coins, they're being used every day. So I think there's other challenges, outside of trust, because I think there are some great products out there that people are using that make it really easy to transfer global currency all over the world, which I think is a big challenge. I think if you think of trust, I actually think of it in a different way. I think you have to have the freedom of choice and remove the friction. And I think friction is one of the biggest challenges with Web3 components today. But as long as you have lots of choice, if you really think about just looking at today, and just even with the question, current currencies, we have built trust over time with companies that we recognize that have delivered value, right? And if you look at MasterCard and Visa and American Express and all these different ways of doing transactions, you've built trust. But the reason why there's trust is there's a freedom of choice. And so if a consumer doesn't believe in a brand or a company, they have a choice to pick something else that actually can do their transactions. And I think that freedom of choice is extremely important. And so you need a system that really brings all these things together and gives the choice to the consumer or business to be able to do these transactions from a blockchain standpoint.
And it's a very interesting way to look at it. And I do think that's an interesting perspective. And, you know, I would also throw into that verifiability, but also, you know, credibility too. You know, and those two side of things as well. And I think, you know, you have to make sure that this person is like a credible person, or like you're saying, a brand, you know, is credible before you even think about trusting it. So having a wide selection of choices for sure, but also making sure that those wide choices are also credible and also verifiable too, to make sure that you can trust them. So I completely agree with what you're saying, Sean, and I'm just adding stuff on top of that just to make sure that they are trustworthy in a nutshell, really.
Yeah.
So Jordan, you've heard what all the other panelists say. You've heard what I've said. And obviously, I'm very curious about your book too. But I want to stick with this question for a second. In what, from your point of view and from your lens, in what ways does the trustworthiness of a digital currency differ between decentralization and centralized systems? I'm very curious to hear your thoughts on this, especially from a VC point of view.
Second, am I muted or am I okay?
I just unmuted you quickly.
Okay.
I think you were muted. Yeah.
Yeah. Okay. Thanks. So it's very important to kind of think about the differences between a standard like paper-based currency and a digital currency, right?
Okay.
So if you have a paper-based currency, it's centrally printed, right? But the actual transactions that happen in between individuals. It's actually decentralized. So the idea, so the experience is that, yes, that piece of paper that I have has a particular value. So I think some of the previous panelists talked about value. So the transparent value of that currency is important. The fact that people will accept it, right? And then it has value. You also have to have accurate transactions, right? So when people are carrying out transactions, there has to be a mechanism that if I'm giving you 5 of this currency, that you accept 5 and I get correct change, these types of things. And there has to be, the understanding that I'm not being surveilled, right? There isn't, I have privacy when I'm carrying out this transaction. And I think that's something that, is when you're working with cash, there's a sense that you're not being watched by anyone. We have had a movement to some level of digital, right? When you're working with, say, a credit card, or you have, a bank account, and you can go and see digitally, what your transactions have been if you're paying online, for example. So there has been a movement. Now, that digital currency is the same as the fiat currency, right? We're all working, for example, in the US in dollars. So, and then we expect that the different vendors that we're working with give us, an accurate transaction. Now, in a centralized system, those transactions and the value, so the value, the accurate transactions, are carried out centrally. So basically, like others have mentioned, there has to be trust in that central provider. So be that a government, right? Or if I'm carrying out a transaction, right? That particular provider, it's not the government at that point, is carrying out the transaction in an accurate way. And I also need to feel that that my privacy is protected. So I don't feel that the bank is spying on me, or, the government knows about every one of my transactions. Now, we do see in movies, like spy and thriller movies, that we can be surveilled, right? That people can quickly go and see my transactions. They can gain access to my credit card transactions. They can get my location information. So in a centralized system, you do have the ability to have your privacy breached, right? Because it is a centralized system. Now, the issue as well, when you go to a decentralized system, you have to look at what are the challenges. One of the biggest challenges when the first decentralized digital currencies were produced was the double spend problem. This idea that you can just create an infinite amount of money because it is digital, and now I can be an instant millionaire, or I can be a billionaire because I can just generate money. So there has to be protection from what is called the double spend problem, right? So in a decentralized system, I need to have the ability to know that I have privacy. I need to know that I have, which I don't have in a centralized system, right? So this is an advantage for using the decentralized system, is that my privacy is protected. I have to have accurate transactions. I have to have transparent value, and I need to know that currency is not going to be artificially generated, right? So these are the differences that I have to trust a central authority. And Nadia talked about, I trust the network, right? So in a decentralized system, I trust the network to protect these 4 things, whereas in a centralized system, I trust a bank, or I trust the government. So where trust is breached is when
it's in the centralized system.
One of those 4 things doesn't happen, right? So the difference is I'm trusting, like Nadia said, the system to provide me with those 4 things, and I'm not trusting an individual. And so the more decentralization you have, the more privacy, the faster those transactions, the lower the fees, the lower the costs, And this is basically what we're seeing now is we're shifting from centralized systems, which are actually inefficient, and especially if they're paper-based, to decentralized systems that are much more efficient because they are running through a network without middlemen and these types of things. So this is the transition that we're going through, but it's actually quite a complex issue because you have to understand first what money is, how does it work, and what are people looking for in terms of the ability to trust. And we've covered a lot of these points. We cover a lot of these things in our book, but I just wanted to kind of lay out that kind of a framework, because with that, we can now start to see what the differences are, and then make a decision. Are you going to go with one or are you going to go with the other?
Well, thank you, Jordan, for sharing that. And there's a lot that obviously we can jump into and discuss there, but we've literally run out of time, so I'm going to have to jump straight into the next question. So thank you, Jordan, for sharing that. And the next question is, how do we build trust among users who don't understand the underlying technology? So blockchain in this case, or Web3, or other aspects of that too. So Nadja, what are your thoughts on this? How do we build trust among users who don't understand the underlying technology?
Yeah, I think I've completely changed my opinion because up until very recently, I always thought that education was the answer. I don't think that that's an issue at all. I think that users have zero interest in learning about what the code is and what the algorithms are and what the safeguards are. They just want the magic button to do what they want it to do when they click it. And so I think, in all the years that I've been in blockchain, whether as a journalist or as a founder or as an advisor, everybody has been talking about educating users in order to onboard them. But try to go on a DEX, try to use a wallet, basically try to do anything in crypto. And you're one site and you run the other way. Right. So I think it's incredibly important, stop trying to impress people with the bells and whistles of what the technology can do. Very few of us understand email, yet we use it every day. And that goes for basically anything. People don't know how AI or generative AI works, and yet it had the fastest, ChatGPT had one of the fastest adoptions of any app ever. So I think it's incredibly important to understand that people, they use things because they work repeatedly, consistently. So every time that I try to do it, it's easy to do and it does what I want it to do. And all my friends are doing it as well. So it really, for me, is not about whether or not they understand the tech, but whether the tech can very, very easily integrate into their everyday lives. So we have to do account abstraction. We cannot expect when someone signs into an app to connect their wallet and they have to remember seed phrases. And it's just too much. And I'm saying this as someone who works in the industry. It's too much for me. You could never, if it's Christmas holidays soon, no one in crypto goes home over the holidays and educates their family on crypto. We all know how that goes.
Like the seed word phrase and going, oh yeah, let me remember that.
I mean, basically, if anyone asks you about crypto, you say, hey, buy Bitcoin or otherwise stay away. And it's tragic because we've kind of shot ourselves in the foot. It was great to get really excited and hyper-focus, but we've basically chased everyone away by focusing on the wrong things, not focusing on safety, not focusing on building a healthy and a sustainable ecosystem. So I think those are the challenges going forward, is making the tech invisible, making crypto not crypto, but just making it money. And then, just, I guess, keeping it safe in general. But that's probably a larger discussion for a different day.
It sounds like to me, you meet the people where they're at, and very much in a nutshell. Like, one thing I will say about the Web3 industry, over the last kind of couple of years, I mean, I would say up to recently, is they understood that they couldn't do the old ways of having MetaMask, right? So they're meeting people where they're at, like, okay, let's use a username and a password, and let's, use all the traditional stuff, which, in Web2 landscape, if you want to say that, they understand, right? So everyone understands the password, everyone understands email, everyone understands, oh, I forgot my password, put my email in. So that's kind of like what people tend to do now. So that's one thing I will say about the companies, but I think when it comes to a trust perspective, the underlying technology, when we're talking about blockchain and the immutability of the data that goes on there, and when we're talking about the transparency aspect of that and being able to have that publicly accessible, I think that's great, for people to be able to have that and be able to see it, publicly see that. Now, obviously, it has to be anonymized, of course. You can't just put any old data on there. You don't want to be putting your own personal data in there. Of course, everyone can publicly see that on the blockchain. But, the underlying technology of blockchain is fantastic. It just has to be used in the correct way. But if you use it in the correct way, then that's great. And then you've also got, and I will go into sort of another rabbit hole quickly, and then we'll switch to the next question, is also the private blockchains too, right? So you've got public blockchain, but then you've also got private blockchains when it comes to the financial sector, like Rodrigo and Jordan, right? You guys mostly work with private blockchains as well as public blockchains too. So the anonymization and the data has to be secure is very important when it comes to like the Financial Conduct Authority here in the UK and stuff like that. So anyway, I'm going on a spiel, but let's dive into the next question. Sorry, Mohammed, actually, we was going to have you on this question. My apologies, and then we'll jump to the next question after. So, Mohammed, what are your thoughts on how do we build trust among users who don't understand the underlying technology, aka meeting them where they're at?
Thank you, Russell. Trust, in my way, shouldn't demand expertise. It should earn by Nadia again. She said that it should be simple enough, right? And people actually trust what is easy and feels simple to use, right? And if because blockchain and digital currency so forth has always been or narrated as such a complex subject or a course, right? Like you wouldn't go home and talk about blockchain, right? It feels too complex, and it's very complex for people to understand it before they can even trust it. I mean, we don't understand email, but we use it. But we understand that if an email is being sent from me, you're sending it to the other person who's going to receive it. You understand that underlying effect, right? But with blockchain and crypto, you don't understand what's happening. You don't even understand what's happening once you buy crypto, right? So trust can only begin if you understand a bit of it, or how transactions, or how it's recorded on the blockchain or so forth. That's how I think it's going to be there.
And I absolutely agree. Like, people need to know, the underlying, like, not necessarily the technology itself, but, what does it do for me? In a nutshell, how does this help me? What's this benefit for me? Is like, for example, we don't go home and talking about the internet, but well, we could if you wanted to. Depends how you want to geek out, to be honest. But no, I completely agree, Mohammed. And obviously that's very important, talking about the benefits. Why is this great? How has this helped me? How's the instant, I mean, like Jordan was saying, the instant transaction between one person to another, that's what its benefits. The benefit is you haven't got to worry about handling cash to another person, or going through a bank and then waiting 50 days just to send something abroad, or all that sort of stuff. You want it from one person to another person. Snap, there's my money. Thank you very much. USDT. Great. So completely agree with you, Mohammed. Rodrigo, let's bring you into this discussion. What are the most common misconceptions about digital currencies that hinder trust and adoption? This is a very interesting question from your point of view, because, I mean, you deal with many clients under the management. So, yeah, what are your thoughts?
Yes, well, the misconceptions, there are a few, right? There are a few big ones that, from my point of view, most of them are outdated because, for example, one of them is that with the digital currencies, they only do illicit transactions, right? Or there are only frauds out there in cryptocurrencies, or that there's nothing behind it, that the market, it's really volatile. There's no control of the value of the coin, right? But in reality, for example, there are facts where those misconceptions, people can see that they're not true, right? For example, so the main one is that they're used for frauds, they're used for illicit transactions, whereas the reality, if I'm not mistaken, the last year there was a study made by universities and also by the IFM, where in the actual monetary system, almost 50% of the transactions were used for frauds and illicit activities, whereas with digital currencies and crypto, not even 15% of them, right? Because it's not for it to be illicit. Regarding the transparency, the thing that Jordan was talking about, there's a lot of transparency. So okay, there's privacy. You don't know who was the person who did it, but there's transparency. You can track the said transaction, whereas the system nowadays you can't, because there's always the middleman, and always there's someone putting a hand in it, right? So
right.
Also, for example, another misconception is that there's nothing behind it. Well, yes, but also with physical money, there's nothing behind it. There's an idea that the money has value. There's this idea. Whereas in digital currencies, you do have technology. Okay, yes, you don't understand. It's hard to educate people for them to learn how does it work and all of the components of said technology. But it's mostly also the idea of what money really is, right? So digital currencies are here to empower again people, to give them back the power of their own money, of their own patrimony, and not control them, right? So that's also something, a misconception that has been out there since crypto started, right? So but the main reason crypto was created was for that, to give again people the power to for their finance, for their personal finances, right? And also another misconception that could be for trust is that, okay, but the market, it's really volatile, right? So in 1 second, you can have 100% gain or minus 1,000%, right? And yes, but people have to understand that in the markets, we are still in the beginning stage, right? It has to grow. There has to be regulation, not regulation in a good way, right? Not over-regulate, like the actual system is over-regulated. Also because it's decentralized. We have to there has to be a decentralized system, and it's at the end of the day is people give the value to the coin, right? So yes, of course, it's a really volatile market. Also, the traditional market, it's also volatile. It's just a matter of understanding the main reason why crypto and digital currencies were created, and why they do work, right? Yes, a lot of people use them for the wrong reasons, and also that's why trust. People don't trust them anymore because of frauds. I want to get rich fast, right? But that's not the point. That's not the main idea of this, right? But it's like anything in history, right? So there has to be a term where we learn how to build it correctly, and then when the curve goes down is when a lot of cryptocurrencies and stablecoins will vanish, because they're nothing, they won't work, and that's when the market and digital currencies will be stable and people will begin to trust them again, and it will be they will have a lot of importance in the economic model that it's building nowadays.
I mean, this is why. First of all, thank you for sharing that, Rodrigo. There's many misconceptions you mentioned there, but this is why stable coins are important, right? Because when it comes to USDT, USDC, I mean, pounds, dollars, etc., when it comes to the alignment between stable coins and fiat, like that's why they use the stable coins in order to have that maintenance, right? So you're not putting your money in Ethereum, for example, and it just randomly drops, and all of a sudden you've said goodbye to like $5 million or something, right? So I completely agree with what you're saying, Rodrigo. Now, in terms of hindering trust and adoption, again, I would say the adoption of all this is still that people still don't understand. I mean, how you tell someone to buy Bitcoin, but people still don't understand what Bitcoin is. They don't know it's made by Satoshi. They don't know like it's worth $100,000 for one Bitcoin. If you said, oh, how much is one Bitcoin worth, or even if you said, would you like to have $1,000 or £1,000, or would you like to have one Bitcoin? Most people will say, well, I'm going to take the £1,000 and the $1,000, And then when they realized that the one Bitcoin was worth over $100,000, and that's when they're like, whoa. And they were like, oh, I'm going to take the Bitcoin now, right? But the point I'm getting at is people understand it. People don't know, right? And because they don't know, they don't understand, it's like, okay, we've got to meet them where they're at, which is why, you know, we saw this whole thing with, I'm trying to remember what it's called. CDBC, is it? I'm trying to remember what the term is. Yeah.
Yes.
Yeah, that's why banks were trying to do that, because they wanted to introduce that to everyday people so that they can adopt it, so then they can then kind of get into the digital currency world, so to speak. So now I'm a big fan of a CDBC. That's a different conversation, but overall, you know, the whole point of the adoption and getting people involved, that's extremely important. And once people adopt it and understand it, it's like people using the internet every day. When people use the internet every day, they trust the internet because they use it all the time. They don't notice a difference. So it's the same with currency too. If you want people to use currency all the time, then it has to be adopted. And the only way to adopt that is by, like what Nadia's saying, first principles is meeting them where they're at. So anyway, Sean, let's bring us this conversation. And we do have a limited time. And also we're getting a few comments as well, but I'll read them in just a second. So your question, Sean, is how can the public accessibly be educated, like Nadia was just saying, on the benefits and risks of digital currencies? So from your point of view, what are your thoughts on that? Or is there a counter argument to that? And basically what me and Nadia are saying, which is meeting them where they're at and forget about the education.
Man, that's a good question. And I actually loved Nadia's answer earlier, because I do agree that if we're going to try to educate people on how technology works and why you should trust it, I think you're going to lose. And I think all great CEOs that put new products into the world, they focus on the people and how it affects their lives versus the technologies that enable it. And I think if you look at currencies, the realization is like, if I want to send money out from the US, and I had to do this recently, and it's really, really hard, you know, to call Chase Bank or whatever bank you use and transfer $50,000, $100,000 to another country. If you've gone through that pain point, you'll understand right away the power of digital currencies, right? Oh. And I think if you start looking at use cases and how it changes your ability to do business, I think you immediately can see the value. And I think right now, I think with current transactions, if you're talking about the mainstream, if I make a mistake in banking, if I make a mistake with my credit card, there's a lot of protective measures in place to save and make people feel they're protected and they can trust the currencies that they're using. And I don't think you necessarily have that. In fact, digital currencies work too good where it happens. And then you're like, wait a minute, what mistake did I do? Did I send it to the wrong person? How do I undo this transaction? And you have to think about it. Most people make a lot of mistakes. There's a reason why we're heading towards autonomous vehicles, because eventually I think computers will make a lot less mistakes than the drivers we have on the road today. And what a crazy segue, by the way. But I think it's important that we have some of the measures we have in place with today's currencies with digital measures, and I think that's really going to allow people to feel more secure. And also, I think retailers, if you think about just the masses, if I'm going to go buy something, how do I make that transaction easier? Does Amazon start using digital currencies or make it easy to use on their platform? Do you see other companies adopting these transactions because there is value being given to their customers? And I think there's a lot of things that it's going to take time. I think the younger generation, I think, is much more comfortable. I think they're more risk. They're open to new technologies and less risk adverse in the sense that they can challenge the norm, right? And they're willing to do things. But I don't think we're there yet. And I think the misconceptions are all true. Sadly, I mean, there are fraud, there is problems, there are challenges, there's scams, and so I think as the use cases become easier to use the technology, you remove the friction. And you make it every day where you can pick and choose the different type of digital currencies used. And like you said, and I'll land the plane, the biggest problem that I have with digital currencies is that you have two choices. You have stable coins that really stay, stable, or you have ones that have extreme volatility. And I think you can't run businesses. You can't run and you sell 10 hats and all of a sudden your Bitcoin drops and you're out of business. That's not going to work. A stable coin doesn't have the inflation type measures that protect you against, the US dollar and all these things will increase or decrease based on how the economy is working to protect you against some of these measures. But you don't necessarily have that with digital currencies. And I have some ideas around that, but I think those are things that we need to think about.
No, I do agree. And, it kind of makes me also think, as we head into the AI world and, these digital transactions may even potentially, go from AI to AI instead of human to human. There might be humans behind it, like human in the loop, so to speak. But when we're talking about instant transactions with AI to AI, and our AI is going to be doing all the work. I mean, here's the other thing: we don't know what the future is going to hold, and that's why when it comes to how can we educate the public, so to speak, on the benefits and risks. I mean, to a certain extent, we do have to do that because of the whole AI now. Now, if we were talking pre-AI, that's a bit different, but post-AI, go ahead, Sean.
Yeah, I was going to say, but you're missing one thing. And the challenge is how do you get access to the AI? And that's through devices. And what people are not thinking about is devices are going to have their built-in AI where you have to use their systems. You don't have the freedom of picking what AI systems that you want to use and how they can connect to anything out in the free, spatial internet, if you will. And I think that's the importance of a browser, a 3D browser. The future of the internet is going to be hundreds of millions of real-time services, whether it's payment, whether it's AI. It does not matter what that piece of software is. And you need the freedom to be able to connect to any service built by anyone, anywhere in the world, versus being locked into a platform that forces you through their AI and what they think that you want. And I think when we can have that type of freedom, that's why I'm super passionate about our browser, is that it unlocks the shackles or the platform thought process where people can now build any piece of components, whether it's a payment solution, whether it's digital currency, whether it's AI. You can now build that piece of software and anyone instantly can connect to it, just like you connect to websites. And that's I think the important layer that people are not thinking about.
And I'll add to that. That's why also Just Verified, we're working on the trust layer, which is all about verification and trust and being able to verify these models and the performance of these models and the behavior of the models to make sure it's also aligned and continuously to be aligned with also what you want to do as well when it comes to, for example, transactions from one AI to another, or when it comes to, for example, like your platform, Sean. That's why the verification side is so extremely important within that too, because you need to have verifiability in order to be able to have that trustworthiness and continuously trust these models that could potentially drift or hallucinate or do many other things. So thank you, Sean, for sharing that. And Jordan, I know we've been having a bit of discussion here. We are going to have to keep this short, Jordan. So try and keep it short as possible if you could. But my question for you, Jordan, and this is going to be slightly a bit different, is, when we're talking about this new world we're going to, right, with AI and then cryptocurrency and then these digital transactions from one to another, from your lens and point of view, Jordan, and this is not on the questionnaire, that's this one I'm just kind of asking you as a side question. From your lens and point of view, when it comes to AI transactions, do you think, or let's say agentic AI, just for marketing terms, but when it comes to agentic AI from transaction from one to another, do you think this is going to be like the future that we're going to be living in, or could it potentially not be that from your point of view, Jordan? I think you have to unmute yourself again, Jordan. Do you need to? I'll unmute you. Don't worry. Okay. There you go. There you go, Jordan.
All right. Thank you. Okay. There it is, the bottom. Yeah. So in terms of like a lot of these last questions, everything that we've been talking about is in our book. So the road to mass adoption, we talk about, agentic transactions. There's an inevitable movement of all currency to digital. So the end result is, regardless of how it happens, the end result is that all currencies are going to be digital. In the near term, you're going to have sovereign nations that are going to protect their right to control the currency, right? So there's going to be a lot of friction, which is going to lead to a lack of government support, right? But then as soon as you get government support and then companies adopt, right, and start using digital of all types, and this is why we have this shift to stable coins following the Genius Act, you lay a foundation for all currencies becoming digital, which is basically what we've been seeing. And the future in the next 3 to 5 years is that stable coins, which we again predicted in our book, would be the first use case that would be adopted, on a mass basis by governments, by businesses, and then by people, is going to be in place. Now, following from that, you cannot have AI to AI transactions if you do not have a trusted digital currency, right? So you have to have that. The digital currencies that have the lowest fees are stable coins, right? For doing that. And then, but also providing certainty, as we've all talked about, right? So volatility is the enemy of business, right? Because you want to be able to predict your future. You want to be able to know. So therefore, the stable coins become the foundation. The stable coins that are the fastest, the cheapest, the easiest to use, that are adopted, at the fastest pace, are going to be the ones that are adopted and used, not just by people, but by AI. And of course, AIs carrying out transactions are in the near-term future. I mean, the protocols have just been put in place for doing it. Agentic workflows to do exactly, AI transactions, but they'd have to be trusted, right? They have to be a trusted workflow. Why money is different from other things is because it's the foundation for economies, right? It's the foundation for nations. And so you have to have trust in that system. And so that's what you have to get. What we're seeing is that the most trust is going into decentralized systems, right? Those are the ones that are at the end of the day going to become the de facto for everything. And governments had to get comfortable with them. There had to be regulation put in place. Businesses had to be comfortable that they could use these types of systems and not cross governments. So in our chapter, The Road to Mass Adoption, we talk about governments first accepting that currencies are going digital. Is it going to be a CBDC? Is it going to be a stable coin? That's a maturing discussion, right? And so, but the inevitable rise and the use by everyone of digital currencies is a train that is not going to be stopped. And the use of AI to do those transactions is inevitable as well.
I completely agree, Jordan. I completely agree. And I'm sorry, Jordan, I'm going to have to jump in because we literally run out of time. We literally have only got 1 minute left. So what I'm going to say is as follows. Nadia, sorry, everyone that's watching right now and everyone that's listening or has attended, first of all, thank you for attending and watching our panel and our GatherVerse and everything. Please do go and follow each of these fantastic panelists. We've got Nadia, Mohammed, Rodrigo, Sean, and Jordan. Please give them a follow on LinkedIn, or I think LinkedIn's pretty much the main place everyone's at. So please do go and give them a follow. Follow their journey, follow what they're talking about, even ask them questions, and I'm sure they would be happy to answer. So that is it from this roundtable discussion. Thanks to each and every one of the panelists. I just want to say a special thank you to all the panelists here. And up next, we're going to be having another roundtable discussion. But for now, that is it from this roundtable discussion. So our Gather was well at GatherVerse Money Summit, and I will see you again very soon. Goodbye.
Thanks, Russell.
Cheers,
Thank you all.
everyone.